No, I've always wanted to be somebody's favorite, just so we're clear.
You are my favorite, Colleen, for sure. All right, so welcome everyone to this August meeting. My goodness, time's flying, of our Budget, Capital, and Personnel Committee. We are all here in person, which is a first in a long time. So we can raise our hands to vote. And I guess the first thing we need to do is approve the minutes from our July meeting. Would somebody like to move those? Rich, thank you, Greg. Any discussion or concerns? We ready to vote? All right, get ready. Everybody in favor? That's unanimous. As far as I'm aware, there are no changes to the agenda, although there have been a couple of amendments to two of our resolutions. That would be Resolution C and Resolution E. And you should all have those copies because Katrina just furnished us with those. So do we have any public comment?
I asked you before on the changes to the agenda if I could have some time for TC3.
Okay, can we do that towards the end? Okay, that's fine. You don't have to ask permission. That's okay. So no public comment. Director of Finance report, we're going to be handling a resolution accepting the audited financials for the fiscal year ended 12/31/2021. And first, I think we're going to hear from our auditors. So Rick Snyder and auditors.
Good afternoon, everybody. I'm going to introduce our team that's here with us today. We have Conrad White and Colleen Stannard, two of your favorites. I think Leslie Spurgeon may be joining us later on, perhaps not. But the bulk of our presentation here will be handled by the auditors, and we'll wrap up by letting you approve the resolution, which is before you today. And that's simply to accept the audited financial report for the fiscal year ended December 31st, 2021. So with that, I'll hand it over to the auditors, and I believe there's Leslie. Hi.
Yeah. My technical expertise is showing.
Well, we don't have your feet, so I think we're in good shape. I'll turn it over to Conrad or whoever's lead off this afternoon.
Well, I can introduce everybody.
Okay, Leslie.
Conrad is our audit supervisor. He's been on the audit for multiple years. And Conrad is the one that really does the bulk of the work. He's our heavy lifter. So we can thank him for all his work and diligence in getting the audit to where it is right now. And Colleen Stannard we have as our audit manager, and Colleen's been involved with the audit for several years too. I've been involved in the audit for several years. However, I am in the middle of retiring. So I will be turning over the partner responsibilities to my partner, Dwayne Schoen, who wanted to be here, but unfortunately had a medical issue with his family that he needed to take care of, or else he would have been here too. But eventually we'll get a chance to introduce you to Dwayne. And with that, I will turn it over to Conrad and Colleen. Whoever would like to start.
Thanks, Leslie.
Was there, Conrad, I know we didn't talk about this much, but I figured I'd do the deliverables part and you get to talk about the numbers, if that's all right.
That is perfectly fine with me.
So we're going to focus mostly on the executive summary. You have a lot of other documents and things in front of you. I trust that everybody's had a chance to really read those and absorb it all, I'm sure. If not, we're going to go over the highlights. So on this page of the executive summary, it basically talks about our deliverables. We have issued an independent auditor's report on the basic financial statements, and that has an unmodified opinion, and that's a good thing. That's the best you can get. It means your assets, liabilities, equity, revenues, and expenses are all fairly stated. We've also issued an independent auditor's report on internal control over financial reporting. and on compliance and other matters. And we identified no material weaknesses or significant deficiencies in internal control and no material instances of non-compliance. That too is a good thing. Every year that you expend over $750,000 in federal awards, you're required to have a separate single audit of those, of certain programs. We've issued a report on your compliance with each of the major programs that we tested during the current year and on internal control over compliance. And there was no instances of non-compliance and no material internal control weaknesses that needed to be reported. And in total, your federal awards that you expended during 2021 were a little over $41 million. That's a lot of millions of dollars. And we'll look at the CFA later and talk about which programs were biggest and which ones we chose. Look, Conrad, what was the major programs for the current year?
The current major programs we had were the SNAP, the Airport Improvement Program, the Federal Transit Formula Grants, and TANF for this year.
Did you all hear him okay?
It's a little light.
Yeah, I had a little trouble. Sorry, Conrad, speak up. But that's okay. We've also issued a communication to those charged with governance, and that's you all. And we had no comments of concern about your accounting practices, and we encountered no significant difficulties in performing the audit. We've issued a schedule of corrected and or we had no comments of concern over corrected or uncorrected misstatements, no disagreements with management, and no other audit findings or issues that we need to discuss. Oh, okay.
I'm sorry.
We also issued a management comment letter, but we actually didn't have any findings or recommendations. What we had was a number of discussion items. And one that's going to probably be the most time consuming for all involved is GASB number 87, which is about leases. Conrad, can you make that a little bigger, please? Some of us aren't young anymore. This is effective for the fiscal year we're currently living in and for next year's audit. And it involves showing a right to use asset for items you lease. And also, if you're the lessee, you have to record those things in your statement of net position. Did I say that right, Leslie?
Yeah, so basically so before, if you had capital type leases that were basically a financed purchase, you showed that like you would any other debt financed equipment. You'd show it in your fixed assets and then you'd show it as the installment purchase debt. But with this new standard, any operating leases that you have over 12 months, so if you are renting out space to an agency that is greater than 12 months, that has to be evaluated for possible disclosure, for possible implementation of this 87. And what it will do is show an asset on your government-wide statements. So you'll have a right to use asset and then a corresponding liability. And then every year that gets written off to expense.
And this is another one of those things that won't have any effect on your day-to-day lives or your budgeting, right. But it's going to be another one of those things that we have to show in the government-wide. And like I said, it's not going to have any effect on how you actually pay the bills,
right? Or
how you collect rent.
Just like the post-retiree health insurance liability that we have to show in the government-wide, the pension standard that we have to show your proportionate share of the pension liabilities, that it's that same sort of thing that affects the government wide and not your funds themselves and the way you budget or expend the money for general fund or whatever fund.
It's just another time-consuming thing for your business office and your auditors.
Right.
So that covers most of what I was gonna say. There are some other things on here, but like I said, the most pressing one is really the leases.
Yeah, there's 96, that's right there in the middle of the page. That is similar to the lease standard, only it's talking about subscription-based information technology arrangements. So basically your software arrangements, that will be subject to the same kind of reporting as the lease standard, only that's going to be implemented the year after the lease standard.
And I'm not
And
sure.
that will be a difficult one as well, I'm afraid. Require a lot of work. So all in all, a very positive audit report again. So congratulations to Rick and his team, Drew and Joanne and all the team and all the people that work with us on the single audit. That's a huge effort as well. We worked pretty closely with Mr. Herden this year with the single audit, and that was really helpful. So a very positive audit report. So I think you should feel really good about that.
Thank you.
Can everybody hear me okay?
You need to be a little louder, please.
I'm sorry.
I know. Does anybody else need the statements to be a little bigger?
Wouldn't hurt.
I don't know
Yes,
about the committee. I don't know what it looks like on your end. It's probably as big as a baseball field, but I don't really know that for sure.
Well, not quite a baseball field, but we've also all had the opportunity to receive this in virtual format and print out the things that we're interested in. So I think we'll manage.
That's good. I did want to say that I know that those soil and water numbers are not finalized yet. We should be finalizing those up this week.
Okay, I hope this is better for everyone.
That's fine.
It's fine.
Okay. I'm sorry about that. A couple technical difficulties on my end. So I can start getting into the numbers a little bit. And as Colleen stated, we will be working mostly from the executive summary for this meeting. First, I'll have a little talk about your general fund this year. As we can see, overall, the first number I'll show you is this fund balance amount. So a little over $74 million currently in your fund balance between your non-spendable, your restricted, your assigned, and your unassigned fund balance. But diving a little deeper into numbers, as we look at total assets, there was a change this year for your total assets as we did not remove the amounts from due from other funds and due to other funds that were between the general and the fringe benefit accounts. So that's why we see such a increase in that, as well as seeing a big increase in cash. Cash this year actually increased about $36 million. A lot of that has to do with a positive revenue that the general fund showed up about $17 million. Plus, we also had some deferred amounts, some amounts for the new ARP funding from the federal government. So all in all, these are some of the reasons as to why we saw such a big increase in your total assets during the current year. In addition, we did have a decrease in your prepaids this year from about $4.6 million down to about 1.6. That is really, in the prior year, there was a contribution that was made over to TC3 prior to year end for the current year that was not made in the current year for the subsequent year. As we look a little bit at your liabilities increased about $26 million over the prior year. Like I said, part of that has to do with how we accounted for the due tos and the due froms between the general and the fringe benefit. But also, as we can see, this deferred inflow line item that went from $1.8 million to $10.8 million, about 10.8 million is really where the ARP funding lives. Now that ARP funding will be living there until the amounts are actually expended by the general or other funds. I know one instance where we saw that was in the capital fund so far, there was about $1.6 million in deferred revenue that was moved over per Rick's instructions, and we'll see that in a little bit. The other things that we saw were that in your due to other governments line item, that did increase it by about $3.4 million. One of those things, there was some increases in the mental health line item for the current year, which did attribute to some of the increases that we saw. As we look at your fund balance accounts, your non-spendable is in direct line with the prepaid expenses. So as one goes, the other also goes. Your restricted went from about 252,000 to about 717,000. With what really is in that account is your planning and capital reserves for about $25,000. The stop DWI, which was for about $281,000, and the root tax was about $411,000. The next line item we have is the assigned fund balance, which went from about $4.5 million up to $10 million. The biggest increase there is your RAA funding. We can speak to that a little bit more, but that was for about $6 million over the prior year. And then the residual fund balance, which makes up the most of your fund balance, about 83%, was about $62 million. So that was about a $14 million increase over the prior year. As we take a look at the revenues and expenses, the one thing I will point out is this $17 million is in the excess of your revenues over your expenditures. That is quite a stark difference than we've seen in the prior couple of years. And as we look, some of the major differences that we saw is this non-property tax items. This increased by about $11 million. There was a large increase in sales tax in 2021 compared to 2020. I've seen that across the boards at most municipalities. So that was kind of something that was unexpected, but at the same time, I expected to see at the county level.
Conrad, don't you think that's kind of bounced back from COVID?
Yes.
It's sort of in line with, 2018, 2019, but it's a lot more than those. There was quite a bit of, we're coming out of the pandemic in the sales tax number that you see for 2021.
Yes, that's
Sorry.
fine. No,
I'm just interrupting.
No, interrupt as need be. The other big swing that we saw this year was the federal sources. You had about $11.2 million in an increase between the 2020 and the 2021 numbers, and a large part of that was your increase in transportation funds for your mass transit, which actually is bus operations, that we can also see as part of the increase down in the transportation line item for the expenses. So the county received the money mainly for TCAP's purposes, and then immediately look to expend that money over to TCAP for those purposes as well. So between those two line items, the non-property tax increase and the federal sources, that was about $22.2 million of a $28 million increase in overall revenues from the prior year. Expenditures did increase, but not as much. They only increase about $12.8 million over the prior year, which is good, showing that you were able to take in more in your increase than in expenditures for the current year. Public health showed about a $4.7 million increase over the prior year. A lot of that was public health, where we saw about a $3.8 million increase in their total expenditures to about $24 million. I mentioned the transportation earlier, that was about a $7 million increase. And general government, a slight increase comparatively, which at about $1.9 million. Your biggest expenditures we have are your economic assistance, which didn't change that much from the prior year, and your general government. Those two line items, general government and your economic assistance, account for about 53% of your total general fund spending in the current year.
Excuse me, Conrad, when you say economic assistance, are you talking about social services, TANF?
Yes,
Yeah.
yes. So the Department of Social Services, the aging, Medicaid, family assistance, those types of programs are within the economic assistance and opportunities line item.
Thank you.
As we move down, we'll move from the general fund over to the capital projects fund. So the county has many capital projects funds that we do consolidate into this one for the executive summary program. But within the large booklet, we can see a breakdown by function, such as there's a general government, a transportation capital projects funds, and so forth and so on. But for right now, we'll look at the capital projects as a whole. For the current year, we saw an increase once again in total assets of about $4.2 million. The biggest increase we saw was in cash, because as we'll see on the next page, we did see a net revenues of about $5.4 million of the prior year. When we look at the liabilities did actually decrease about $1.1 million. A large portion of that has to do with your bond anticipation note payable, which is your short-term funding. Now, in some cases, we would see the bond anticipation notes payable from one year to another decrease if you are looking at bonding for the current year. Even though the county did bond, what we saw was there were three bands in the prior year, three instances of short-term debt in the prior year that were consolidated into two short-term notes in the current year. And the difference was the pay down on the old debt into the current debt. Now, as I mentioned before, one thing that we did also take a look at was this $1.6 million unearned revenue, which is part of the ARPA funding that was given to the capital fund from the general fund in the current year. So as there are expenditures for the specific project that this was moved over from, you will start to see this line item decrease. And what we'll see is then an increase in revenues going forward in 2022 and beyond as that amount is spent now. Now, as we look at the fund balances, what we can see that there's actually a deficit overall in the capital projects fund. However, we do have a total positive fund balance of about $9.6 million. Biggest items being your assigned fund balances of about $9.9 million. As we look to the revenues and the expenditures, what we saw was a decrease in the revenues and the expenditures from the prior year. What we noticed that in the prior year, this $10 million plus this $8 million were part of federal projects and state projects that were being done at the airport that were ramping down in the current year. So they were close to completion, or some of those projects have been completed. So because of that, we would have expected to see a decrease, as we did see, of both revenues and expenditures for the current year. And this transportation line item really shows where those amounts were spent from. We saw the general governmental support also decrease in the current year, about $1.4 million, because of the county's expenditures in the prior year for the new COVID protocols that increased the amount to, that was what we saw in the prior year for that $2.5 million. In the public safety line item, there was a $2 million decrease. What we saw last year was the sheriff's quarters being upgraded as well. And also the only increase that we really did see is in the home and community service line item. And there was an upgrade project being done at recycling and solid waste, which led to the large increase in the current year. Are there any questions so far?
No, we're good so far. We're clinging by our fingernails to try to understand what's going on, but we're okay so far.
Oh, please let me know if I need to go any slower or explain more. Sorry about that.
No, it's not your fault. It's just that we're not accountants.
It's very clear.
So So as we look farther down at the other financing sources and uses, we do have some interfund transfers in. In the current year, a lot of these monies did come from the general fund. We do have some interfund transfers out, which is about in line with what we had last year. And as I mentioned, there was a new serial bond that the county had in the current year for about $3.2 million for various projects to be completed in the near future. So next we'll take a look at your debt service fund. The debt service fund also saw an increase in the total assets, are relatively large for the fund itself, of about $1.4 million. We did once again have some net revenues in the current year, as we'll see on the next page. We have the securities and mortgages, which shows as both a receivable and as a deferred inflows or resources. What these are amounts that are due from the cooperative extension facilities. I think there are 2 amounts that are still being paid down on currently. And this 4.4 million represents the residual fund balance of the debt service fund. As we take a look at the revenue on this side, the revenues did decrease from the prior year. What we saw was that the payments from TC3 to the county did decrease for their current agreement, and also the miscellaneous local sources did decrease about 174,000, and that was really due to the PFC charges. There was a decision made to look at making the PFC charges revenues in 2022 instead of 2021. What we have is the debt service principal and interest payments. These did decrease over the prior year as your debt is being spent down upon. So we did expect a decrease in the current year, as there was no, and we should expect about the same amount or a little bit higher depending on the payments with the new bond and for how long that will be amortized over. What we had also was interfund transfers in, a lot of that from the general fund as well, of about $6.4 million. Some premium on obligations that are premiums that were on the bands for the current year of about $205,000. So overall, we did see that excess of the revenues of about $1.4 million.
Ask a question.
Yes.
I wondered, each year we increase our capital payment by 1% of our levy. Where does that show up? Is that in the revenue line?
I think he's talking to you, Rick.
Yeah, it shows up in the general fund as an increase in your ad valorem taxes, and then that contribution out of the general fund to both your construction funds and your debt service fund is where that money is expended out. So that's more of a function of the general fund. The money comes into the general fund as taxes. It goes out as contributions to capital projects and or the debt service fund. And then it would show up on this particular chart here as part of the interfund transfer in. That $6.4 million is the money that's coming in from other funds like the general fund. So that's how it comes into the county, and a portion of that ends up in this $6.4 million to service the debt, the existing debt.
Okay, thank you.
You're welcome.
The last set of funds that we'll talk about, we've consolidated as well. And these are your special revenue funds. These funds are your road fund, your road machinery funds, your special grant fund, your refuse and garbage, as well as your airport transportation fund. So overall, we did see another increase in total assets over the prior year of about $1.1 million. We did see a smaller net revenue for these overall of about $10,000. So the large increase of in cash, which was about $808,000, has a few factors, including amounts that are payable that still may have been, the invoices may have been received after year end, even though they dealt with the 2021 period. So it's a timing of the payments themselves as to why we saw an increase in the accounts payable for the current year. What we also saw was an increase in speaking on the accounts payable, what we mainly saw was the timing of payments in mainly the county road and the refuse and garbage funds. So that equated to about $580,000 of an increase in accounts payable for the current year. Overall, the liabilities and did increase about $1 million. The due to other funds line did also increase about $600,000 over the prior year. And these were amounts that were due to various other funds, such as the D to the capital fund, the road to the capital fund, or to the general fund in some cases. Now, fund balance, as you can see, it did go from about $6.9 million to 6.914 to about 6.925 over the prior. As we look at the revenues and expenditures out of the special revenue funds, we did once again see an increase in total revenues. The main highlights that I'd like to point out are your refuse and garbage collections, which came in about $1 million over the prior year. The CHIPS revenue within the state sources was another $2 million, I believe, in total CHIPS revenue, but overall the state sources were $1.5 million. And then the federal sources of the increase of about $1 million, a lot of that was equated to the CRISA grants that came into the airport in the current year. On the other side, we did see a large increase in home and community services of about $1.3 million. And a vast portion of that was actually due to the refuse and garbage, which saw a large increase in total expenditures over the prior year. So once again, overall, in the current year, we did have an excess of only about $10,000 within all these other funds. Any questions?
I do have a question. The second installment of the ARPA funds, is that treated here anywhere, or we just wait for that to come in?
Yeah. The second
No,
tranche comes in this current year, 2022.
Right. So, but that we don't show anticipated revenue in the 2021 audit or anything like that?
No.
Okay, thank
No,
you.
in fact, the first tranche, that which was not expended has been deferred. So you didn't show the complete amount of the first installment of the revenue. I hope I put that correctly.
That shows up as deferred revenue in
General fund.
general fund.
Which is a
95%.
liability.
I'm sorry,
So
Leslie?
I was just saying it's a liability, so,
Right,
yeah.
right there, what Conrad has, that deferred inflow at $10 million. Most of that is ARPA funding. There's another $1 million in a capital fund right there. And that shows where the ARPA funding lived as of year end. So the legislators, a number had called and asked, where's the ARPA funds? Where's that in the fund balances? It's not in the fund balances. When we start to talk about what's in fund balance, it does not include the ARPA funds. The ARPA funds is under liabilities.
That was as of December 31st.
As of December 31st, right?
And if you're spending the ARPA funds on expenditures that you never had before, so if you're doing projects and you're spending more money, it will never show up in fund balance because the expenditures will equal the revenues. So it won't result in an increase in fund balance, if that makes sense.
Right, to the extent that you spend it all, like, say we spend it all this year, there would be none left at the end of the fiscal year. And so what Leslie's saying is you would never see it in fund balance. It would come in and go out all in the same fiscal year.
And you wouldn't recognize any revenue until you have qualifying expenditures under the program.
Accounting is magic. Rich, John, you have a question?
Yes, just for clarity, we're embedding our consulting firm that we're using to assist us with our grant program out of the fund. Where will that be recognized? Because that's not going to any programming, it's going to pay a. Does that
Apparently,
you
it won't
can
show
use-
up
does that
at
just
all.
balance out as well?
You can recognize revenue. I mean, you can use ARPA funds to pay for that.
Yeah,
So
we understand that. We're just trying to understand. It sounds like, and I'm sure this isn't right, that the ARPA funds will come in and go out and never appear on our financial statements.
So
So-
they'll appear as revenues and
An example-
expenditures.
sorry. So an example of what that may help is within the current year, the capital fund had $34,000 of expenditures, I believe, out of general support that was ARPA related. So we would see the increase of the 34,000 within the general governmental support, and the corresponding increase in revenues in the federal sources. So it's a $34,000 into the expenditures, and then an immediate $34,000 reimbursement into the federal sources. So that's why we mean it will not show up in your fund balance, because it is a zero sum at that point.
Okay, so it will show up, but it'll be a wash,
It'll be a wash, exactly.
which is different from not showing up at all.
Correct. It'll definitely show up. And it'll be on your schedule of expenditures of federal awards as well.
Okay, that does make sense, I guess.
A part of the timing when 2021 is, or the problem where 2021 is concerned is the timing of the receipt. You didn't really have time to spend all that money. So that's why you're not seeing it in the revenues and expenditures yet as of December 31st.
Right. And I know, working with Samantha, she's very much on top of the ARPA funding.
That's good to hear. Thank you. Does anybody have any other questions for our Insero team? I did have one question. Conrad, you mentioned at some point an increase in RAA, I think you called it? REA.
Yes, that's
Oh,
RA.
that's your retroactive
Retroactive
time
pay.
fund balance.
Yes.
Okay, great. Thank you.
Yeah, so that will show up here within this $10 million assigned in the general fund.
That's kind of a little piggy bank against the,
Right. I just didn't know what we called it.
Retroactive account, yeah.
Okay. Anything else for Insero or Rick? All right, then I will accept.
Can I just say, I always appreciate this presentation, and I think I understand about 90% of it anyway. I think it's really helpful for us here on the committee. And I did want to mention, I see Drew is with us, and I'm sure he had some help here along the way too.
Oh, definitely. Couldn't have done it without him.
I will say that as much that we come in and we give them a hard time on a daily basis, working with Rick, Drew, and in the past, Joanne and Tom this year, it was a great experience, as it always is, to work with all of them at the county. I come in for 3 weeks, and I do look forward to this audit on a yearly basis, working with them.
don't, Conrad, you're not supposed to tell them that.
I had to pay him to say that.
Conrad,
say
you
something.
need to get out more.
I posted our email addresses in the chat.
Oh, so did I.
Okay, so you got them. So if you do have any questions, please don't hesitate to call one of us or to email one of us.
Thank you. That's really kind, Leslie. We appreciate it.
Sure.
Oh, you got a hand up.
I see a hand up. Yes, Rich John.
I'd like to say I understood 90% of it, but I haven't done that calculation. But I'm wondering, is it timely to move the resolution accepting the audit?
I was about to invite that. Would you like to do that?
I would very much like to do that because I also wanted to say thank you for all the work on this. I would move acceptance of audited financial report for the fiscal year ended December 31st, 2021.
All right, and Greg seconds. So any further discussion? Are we ready to vote? Okay, all in favor? That's unanimous. Good job, Insero, as always.
Thank you so much.
And thank you to Rick and Drew and your team as well.
Welcome.
And Samantha. Okay,
Thank you.
And stay tuned till next Tuesday night's PowerPoint presentation where you get to see the highlights at the fund level for each of the funds when we discuss highlights of 2021 Tuesday night at 5:30.
okay, we're looking forward to that, Rick.
We're on pins and needles, Rick.
We'll be
Brought to you by Dial Soap.
We'll be camping out in the parking lot for that. Okay, so now moving on to the county administrator's report.
Thank you so much. Bye, everyone.
Lisa?
I was just going to say it's bringing the fund, bringing the fund.
Yeah, there you go.
So I have a brief report and I'm going to hit the trifecta of budget, capital, and personnel in my report. So on the budget side of things, Norma and Samantha and myself have finished our meetings with departments on the operating budget, and we are working over these next few weeks to on the recommended budget to present to you on September 6th. We got some late breaking news from DSS about some mandates. The foster care block grant allocation was about $300,000 lower than previously expected. So we're working that into our figures. That's always something that can swing. The mandate costs from DSS and others can swing us in one direction or another at this stage of the process. And so that's something we're taking into account.
I'm sorry, Mike, were you saying that's good news or bad news?
Bad news.
Bad news, okay.
300,000 to the bad.
I thought you said it was $300,000 less than you anticipated.
No, the funding is
Correct.
good.
The funding.
Amount of funding.
Yes.
Okay, thank you for correcting me.
Yes. Yeah.
That's not great news.
Yeah. And we've talked about some of the cost increases we're seeing, of course, with the capital program and also any budget, operating budgets that depend heavily on fuel. So you'll be seeing the bigger picture in about a month. But that's where we're at with the county budget prep. We're still in the midst of it. On the capital program, we have, in the last month or so, updated all of the respective program committees about the capital projects relative to each of those committees. And I think I would point out two notable items. One is large projects. The airport, we had a $15 million project originally slated to take place in 2023, which is the ARF SRE building, where they maintain all of their equipment. It's been in progress with the FAA over a number of years. It's a $15 million project, about $5 million in local costs. And with permission of the FAA, we have delayed that project just due to concerns about how we would handle that in our current budget. So that is, luckily we were able to delay that, but it is still going to be on the horizon for us. The second is our green facilities project, which we are currently in phase 1 of in 2022. That project was initially slated at 7.3 million, and phase one now to complete it is 14.4 million. It's almost double. So they will be completing what they can with the 7.3 million allocation for phase one in 2022, and we'll see the remainder of those costs for 2023 we'll see those remainder of those costs for phase one in the 2023 capital. So
I think Rich has questions.
Is the change in cost due to scope changes or construction cost changes?
construction cost changes, same scope. So we had a presentation by Johnson Controls and Arel Lamaro and Terry Carroll at the last F&I committee.
I'd like to say, how can you let this happen, Lisa? But
Fault.
You'd like to, but you'd be.
I won't. That's a dramatic change
Yeah.
in cost. I mean, I've certainly gone to the hardware stores and seen prices fluctuate, but.
Well, part of that's labor as well, isn't it?
I don't know that how much of it would be due to labor. I think, well, potentially the shortage of labor, but a lot of it are materials and
A lot of specialized equipment that we're getting.
absolutely, yes.
Okay.
And for reasons which we'll mention, we recommend completing phase one because it is going to be, I think, worth it for the payoff in terms of emissions, but also it will set us up to get money back from NYSERDA grants through the state, which would be left on the table if we stopped midstream.
This has the biggest long-term impact. Yeah.
So that's the capital portion of my update. And then the last is personnel. And that is we have, I think, some pretty good candidate pools for Deputy County Administrator and Chief Equity Diversity Officer. We'll be working with Ruby to schedule those interviews. And later on in the agenda, we have a resolution to move the county's employee health and safety coordinator function from the health department to county administration. And I can talk further about that when we get to that point in the agenda. That's it.
Okay, is that everything? Any questions? Seeing none, we're moving on. Committee chair report, Henry has asked to be excused. There was no WDIC meeting this month for him to report on. I don't really have any particular additions in terms of a chair report, just my recurring drumbeat of when you look at our fund balance and our overall financial position, please remember things like, capital projects that double in cost and increase costs of staff, and the fact that it's costing us much more to provide the services we are mandated to provide. I hate to be a broken record, but I know that, when we got this executive summary, people went, oh my God, look at our fund balance. But, it's a context that you've got to view it in. So Greg.
I remember there was a vigorous discussion last year in the previous legislature about the amount that the fund balance should represent as a percentage of our operating expenses. Is that the correct way to say that? What was ever decided, or where did that conversation fall?
So funny you should mention it, because in preparation for this meeting, I dug out the materials. So last year we updated the fund balance policy to include a minimum amount of 18% of general fund, to maintain a minimum of 18% in the general fund balance. And that is based on the previous year's audited fund balance over the total revenue for that year.
thought
So
it was the budgeted expenses, but,
according to the policy, it's the revenue.
oh, okay.
Um,
Well, you got a piece of paper, so you beat me.
So it's 18.
It was changed to actual revenues,
Actual year-end revenues.
actual year-end revenues, yes.
So what would that be?
Just according to the audited statements, my calculation is about 30%. We're at 30% right now. The 18% would be 47.9 million. We are at 62 million, which is about 30%. I also, there were a few things as I was looking at what we have in our budget or through resolution agreed to for the use of fund balance so far in 2022. We have $3 million in our capital program, plus the change that was just agreed upon with a resolution a month or so ago, where for the Community Recovery Fund, instead of using the general fund, we were going to use ARPA, and we would use 6.53 million in general fund toward capital instead. So there was that swap there. Then we are also tallying up the number of one-time OTRs, over target requests, that are coming through the county's budget process. It could be up to about 3 million. And then we don't have a figure yet, but I believe it's on people's radar that we're going to have some shortfalls with our airport this year. Which we're going to need some serious consideration as to how to address those.
You're saying as of right now, in 2022, we're about 12.5 million somewhat spent, projected to be committed out of fund balance.
Yes, those are the known.
The known
Mhm.
expenses. And part of that 3 million, and that doesn't include the shortfalls at the potential shortfalls at the airport.
Correct.
But that does include OTRs in the budget process. The 6.5 for the community recovery.
Well, it's actually for capital.
For capital, the
But,
swap for
yeah.
capital. Got it. And then 3 million has already gone through, or capital and other expenditures that we've approved.
That were in the 2022
Oh, that
capital
were in the 2022. Okay.
budget, yes.
Got it.
Amazing how fast $12 million can disappear. Mike.
Disappear. It's still there accounted for, like in the
Yeah,
audit.
but we've spent it. It's not sitting in the general fund. Mike.
You're right. You know, you think there's a bunch of money there and all of a sudden there isn't. And I'm sorry we chose that 18% last year as opposed to the range, which had been recommended to us by our finance director and the previous county administrator. I think that.
What was that, Mike?
18 to 23%.
And what I liked about the range concept was that it took into account that these things do change. And that we shouldn't say, well, there's a figure, therefore let's spend, or there's a figure, let's tax more, because we haven't got it. So I would have no problem revisiting that at some point if folks wanted to.
That's fair. And I think the other piece of this that we need to bear in mind is if we're basing it on last year's revenues, our revenues were up last year, and our revenues may well be up again this year, given our sales tax performance so far. But I think we need to bear in mind the impact that inflation is having and may continue to have as we move forward. It's just scary to me because we don't have a lot of leeway. Somewhere in excess of 60% of our budget every year is unfunded mandates. I mean, we have no choice. We can't cut expenses on those. We have to continue to provide them. So, yeah.
When times get hard, those go up.
Yes, they do. So, okay, I'll shut up now. Does anybody have any other questions? Let's see, is Ruby there? Is somebody? Hi, Ruby. So nice to see you. Come on up or come on down, as the case may be.
Hello, everyone. Glad to be back. Just a quick review on today. Later on in your agenda, you will have a resolution to authorize the compensation study that we've been talking about for quite a while now. If you will remember, we requested proposals, but at the end of last year, we had 5 proposals to be submitted. We've interviewed and revised a couple of things. So the group chosen was Burke Group, and that was based upon their experience, based upon their pricing, and what they could do for us as far as the timeline is concerned. Burke Group has been the organization that has conducted several of our county compensation studies within the last year. They've also, at this point, are working on the city of Ithaca's compensation study, which means that a lot of the work that we are requesting has already been done. So that shortens the timeline significantly. We should have results from this phase of the compensation study, which is simply a market analysis. This is not the position description, classification, or any of that. This is simply a market analysis that will be done from our 6 contiguous counties, as well as our comparable counties. And it will include the city of Ithaca, Ithaca College, Cornell to an extent, although we recognize that our salaries for public employees are not anywhere near Cornell's, but we still want that information in hand. So that timeline should be anywhere from 2 to 4 months, and we don't expect it to take that long. For those salaries that are identified as significantly different from the market analysis, we will then go into the second phase, which is reviewing our position classification, looking at how the compensation was decided, and then figuring out what we can do about it. But first, we need that knowledge, that information, where we are and where do we need to go. So that resolution on today's agenda is simply for the market analysis. The price is pretty good. The rate is $16.5 for that portion of it. The legislature allocated $100,000 for the entire project. So we're doing it in phases. So just to make sure we have what we needed done first. If there are any questions about the compensation study, I can answer those now, or would you prefer later when you actually have the resolution before you?
Well, we could move it, Ruby, on the floor while you're here to address it.
Okay.
Okay, so why don't we do that? Can someone, okay, Lee has moved it, Rich has seconded it. It is now on the floor, and Lee, you have a question?
Burke Group, were they the ones that used to Cortland County?
Yes.
So they're into the region already, which is, I think, a good
Correct.
thing. And Mike and I have been following that one, I think, in the Cortland standard. And they saw some pretty good changes there. The second thing is 2 to 4 months on the results of it's probably going to put us past the budget adoption. Are we reserving funds in some manner or anticipating something that we're going to have to do probably in the next budget year to move to the market rate?
I think we can do that in terms of one time, but in target remains to be seen. Yeah.
So yeah, we may see an expenditure on one time, but it has a jump in the ongoing budget and future budget years as we're looking at some other major projects.
This will be a gift that keeps on giving to the county for many years, yes.
Lee, it could be a whole series of pay cuts, you know.
especially for
We're waiting
legislators,
for the
right?
study.
I've been in government for 30 years plus, Rich, and I haven't seen they haven't yet, but.
Now, if you will
We'll see.
notice, I'm not sure if you all received copies of the compensation study that was done before the County Association, right? NACO, NACO. Some of our salaries are not as far out of pocket as we expected. And I think I've been cautioning everybody from the beginning that there are some that will be significantly different. There are some that we are very much so ahead of the game. So I don't think we should expect everyone to automatically get a 3 to 4% increase, because that's just not going to happen. And again, this is just the information. This does not deal with what our actions will be once we get that information.
Okay, I saw Mike and then Greg.
Yeah, I'm not really sure whether it's the right place to address this, but it's something that's on my mind, and that is how we compensate for inflation or not compensate for inflation with respect to this salary study. We know it's up 8 or 9% this year. I have to think back to the late 70s, early 80s, when we had huge inflation and people were getting behind and the labor contracts were demanding increases because of the inflation. But the municipalities just couldn't give them the full amount of the inflation increases. And I think we may be looking at that here. I worry when I hear the announcement about the living wage calculation. Well, they just added the inflation figure to it and said, well, now to have a living wage, we got to give them an 8 or 9% increase in the quote living wage. And that, of course, is a calculation based on a number of factors. It's championed by organizations that are, of course, very interested in the social welfare of the lower income employees, and that's not a bad thing. But I just think we have to be very, very careful because the people who pay for these increases are not necessarily getting those kind of increases in their salaries. And so we have to think about that. Thanks.
Well, I would caution us to remember that just because a recommendation is made, it doesn't necessarily mean we're going to implement every detail. And the other thing, I think, when you start talking about the living wage calculation, the people who are at the bottom of the scale get hit a lot harder than the people as you move further up. You know, in that case, it seems to me it makes more sense to add an inflation increase because you're looking at a minimum living wage, and that includes components of things that people have no choice but to buy. I don't know. I don't think I would feel as moved to increase salaries for our top level employees as I would be concerned about making sure that the people at the bottom of our pay scale have enough to live on.
Strategy was recruitment and retention and
Yeah.
the exodus of people we were seeing.
But we can be reasonable about that. I'm not saying, well, you know, if you're earning above a certain amount, you will never consider giving you a raise. But I think my first priority would be people at the bottom if they're not earning enough to get by. Anyhow, but I'm sure that's a debate we will have. So, Greg.
Yeah, I look forward to seeing what the report says before I make any, I guess, further comments on compensation. Just to clarify the process. So this will identify, areas where there potentially are deficiencies or where we're over a targeted amount. We'll then come back, review what positions were listed in deficiencies. And then the phase 2 would be a review of that classification of that
Right.
position.
How did that position come to be at that particular grade or salary?
And that's something that we contract with the consultant to further evaluate.
Right. If, I don't think we will go out to bid again. We will use the same vendor to do phase 2. We just wanted to break it up into parts that we could use right now.
Chunks, sure. And then from phase 2, we would get a list of recommendations on possible reclassifications.
And how do we maintain comparable salaries so that we won't be doing a compensation study every 3 to 5 years?
And then that would be put in some sort of resolution form and brought to this committee to vote on reclassification of
The
positions.
results will be, whether it's reclassification or recommendation, the results will be brought to the legislature. And at that point, we're simply providing the information.
Got it.
What the ledge does with it is a legislative decision.
And there's another component to it in that we have 4 bargaining units and we have contracts, or
Right.
we hope to have contracts with all 4 very shortly. So the salaries are governed by those contracts.
So in all reality, the change will take some time.
Yes.
All right, so as we go into our budget discussions in September, really, it's kind of premature for this
For September.
conversation. I mean, it's really 2024, which would likely be the most impacted fiscal year from this process.
I would say so.
Okay. I just want to make sure that process is clear, because I know a number of my colleagues will, the compensation study is coming. Well,
Right.
it's really not having an effect in 2023. It likely would have the greatest effect in 2024.
Right.
Okay.
And I think in all of these conversations, we've been trying to caution everyone. This is not an overnight fix.
Sure. This is a long-term strategy
This is a
for
long-term strategy.
having a better compensation structure for
Right.
everyone that works at the county.
Go ahead, Lee.
Well, not to throw cold water or anything.
Go ahead.
But if you.
Lee, could I ask you to talk into your mic?
If you anticipated some huge costs and programs or services, it might force us to a discussion of evaluating, continuing to provide at that level. There's no assumption you're going to continue on if with what you have today. I mean, those are policy decisions that could factor into it. If you saw huge program expenses in some particular program area, you may need to evaluate if the county can afford to continue to provide that, or whether there's options out there in the private sector that may be able to more economically provide it. I'm not saying that's what we would do, but that's something you can't take off the table either.
It's basically what we've been doing all along. When there is an issue with a particular salary, it has been brought to the legislature, whether it's retaining an employee or hiring an employee. That's been done on a case-by-case basis. What we're talking about are strategies and development across the board. So if there's a problem with a specific position, then of course, the departments let us know and we bring it to the ledge.
But bear in mind as well that there are certain programs about which we have no discretion.
Right.
Yeah, and that's something that we always need to remember. And also, just because it's not going to hit us until 2024 doesn't mean we should go on a wild spending spree in 2023. Okay, just yet. Yeah, there you go. Okay, then. So that resolution, remind me, is on the floor. It is moved and seconded, and we just need to vote on it. So, all in favor? Unanimous. Thank you. And thank you, Ruby. Nice to see you. Okay. All right, then.
I continue. A
Yeah.
couple of updates. The performance evaluation policy has been updated. Our HR staff is in the process of developing a strategy for training for department heads and supervisors based upon the policy changes. And also, we're beginning a process where we will have a performance evaluation discussion for your direct reports. So an email is coming to you all where we're going to outline the recommendation that right now we have 2 of your most recent direct report appointments that we're going to recommend an initial meeting where I'm asking each legislature to review their job descriptions and to return to me expectations. What do you expect from these particular positions so that we can make sure during that initial meeting, the employee has an idea of what they will be evaluated on. And then we will go through the process. So that email is coming to you all very shortly. And the process will include your review as well as some of the 360 reviews that we've had previously. But that will be coming to you. We just want to outline a better way of evaluating your direct reports as while we're doing the employees as a whole. So that's coming.
Okay, Greg has a question.
One, I think this is a great step. I think this is needed, and I appreciate you for keeping this ball moving. Is there an opportunity for our direct reports to also maybe suggest things that they would
Yes.
need different, right? So it'll be
Yes.
holistic.
That
Okay.
will be done in the initial meeting. It is
Great.
it's a conversation, two-way conversation. Your expectations, what do they expect? What resources do they think they will need to accomplish what's not only in the job description, but what we're all expecting from them
And this was also happening not just here, but
across.
countywide.
Right.
Okay, excellent.
Any other questions for Ruby? Okay,
Okay, we're gearing up for our fall centralized civil service testing. So you will be seeing announcements coming through your emails and everywhere about different exams that are coming up during the fall. And we're asking you to help us recruit, encourage people to take the exams. That's the best way to get into a position and actually remain there. Lisa mentioned that the searches are underway for the Deputy County Administrator and the Chief Equity and Diversity Officer. We're reviewing applications and hope to be through that process very soon. We've incorporated the revisions by our current Director of Finance into the job description for the Director of Finance, and it should be posted either today or tomorrow. It may even be posted now. I haven't had a chance to look yet. The position for the Environmental Health and Safety Coordinator, which you also have a resolution for changing the structure, we're asking for your assistance. We encourage personal networking and sending the posting to different networks and associations that you are a part of. To date, we don't have any applications for that position in the system. So I will ask our recruitment administrator to actually email you a posting. So if you can put it on your networks, if you know of someone who's in that field or may be interested, just to help us in our recruiting. Upcoming searches, we're going to have the Director of the Office of Employment and Training and the Clerk of the Legislature, but those are upcoming. So we will be talking and trying to decide the process for that. And we'll let you know as we go. And ending my updates, don't forget August 31st is the employee picnic. Everyone is invited, not only to come and just or participate or just enjoy meeting the employees. And I believe that's from 11 to 3. I don't know. I just show up when they should tell me to show up.
5.
2 to 5?
2 to 5, yep.
Oh, we've changed times. Okay. It's because we're out there all morning. Okay. It's from 2 to 5. So you're encouraged, please come and just socialize, fellowship.
Mike?
A couple of things. One, I'm glad you mentioned the picnic, and at some point in the future, maybe you could update us again on how we're doing with employee recognition. I think that's an area that we need to keep constantly in front of us, because I think small things that we do for our employees mean a lot, very often. The other thing I wanted to bring up, and I brought it up at GO, is that the library director search is underway. The first search was a failed search for the library director last year, and we have another one going on now. I'm on that committee. The difficulty with the library director is that it is a civil service position. Compare it to the president of the college, for example, which is not a civil service position. It's a confidential position hired by the Board of Trustees of the college. And we do have a Board of Trustees of the library that conducts these interviews and searches for a president. I would really like to see us look into this seriously about how we can change this position to become a confidential employee and not be a civil service. We try to do a nationwide search, and many of the people that might apply from other states, they have no concept of what we have to do as far as our civil service. Our library board must pick from the top 3 scores. And that's this, in this case, there are several levels of scores. And there may be people in the lower scores that may have attributes that need to be discussed as well. So I would like to do that. And if it takes state legislation in order to make the change, I think we ought to ask our state legislators for home rule legislation that would allow us to do that. And I wanted to bring that up. And if folks happen to agree with me, maybe we could ask Ruby if she could give us an idea of what we would have to do in the future to make that move.
Mike, I did look, after the GO meeting, I did look into some things, but it will take state legislature. As long as the library is considered a public library, it is subject to civil service terms. The only library that's not subject to civil service is what they call a free or association library. All municipal, school, special district libraries that are titled that in their charter are subject to civil service terms because it's a public entity and it receives public funds. So
I'm not suggesting the whole library be not civil service. I'm talking about just
that one
position.
title is a statewide title that also has Department of Education requirements. So it will take state legislation to even clear that one title.
And that wouldn't be solved with home rule legislation since it's statewide. They're not going to make an exception, I don't think, just for us. Oh, okay.
That's the statewide legislation that there are exceptions for particular counties.
Okay. Well, I guess we know what we have to do. So if somebody wants to reach out to our state representatives and see if that's a viable option, I guess they can do that. Anybody else have thoughts on that?
One question for you. Was there a change made in department heads so that they fall outside of this civil service in the last couple of years?
Certain department heads, we were able to petition the state with the help of HR.
So it seems as though that this would be comparable to some of the recent policy with regard to some of the department heads.
But because of the Department of Education requirements for that title, that's different than a department head that's appointed. For a lot of the department heads, it's simply an appointment. They may be unclassified, which means there really are no minimums. But for the library director, it's tied to population, it's tied to educational requirements. It's a little bit more complex than, I shouldn't say just a department head, but a department head. So if you're doing it, you need to look into all of that as well.
So you're saying that there are federal regulations
State and
that. Rich?
Yeah, it sounds like we've accomplished through our legal definitions the inability to hire a library director. But we have had some really good library directors in the past, and we were using the
Civil service.
system to get there. Has something changed, or do we think we're really going to get a better pool of applicants if we could avoid that?
And you've got to realize too, the civil service exam for library directors are based on training and experience. It's really a review of their certifications, their experience, and it's done computer, but it's one of the most, if I had to have a civil service exam, I'd want it to be a T&E.
So it's not
based
really an
upon-
exam.
Right, it's on their training and experience. And they have to do it, yes. The problem comes with they have to be in the top 3.
Okay.
I would just also point out that some of our commissioners require certain background and education and things that when we appoint, like the mental health commissioner has to have certain certifications.
Okay.
At some point, maybe one appropriate or as an aside, it may be helpful for, I don't know, which legislators to maybe understand that civil service process a little bit better, right? I mean, it seems like there's some specifics and nuance and things like that. It strikes my curiosity. I don't know if it strikes others or if it's sounds boring or unexciting, but it's a tool that's, I think, that's used and there's a lot of conversation around it. So at some point, I would be interested in learning more. Obviously, not to become an expert, to just be conversant enough in the processes around that. So if time allows or if there's an opportunity to, I think that would be helpful.
I had attended I think they called it Civil Service 101 for legislators. That was exactly what you're talking about. And it was helpful. I've forgotten everything, but I would go again. Yeah.
Who sponsored that? Can you remember?
We did. The state does provide.
No, it was here. It was in HR.
Right.
I'm trying to remember who.
The former commissioner, Amy Guerri.
With Steve Estes.
Or Steve Estes.
Steve Estes. It sounds like something
No, it was a
Steve would.
woman that was working with Amy. Did it.
Right.
Yes.
And then, the state, well, before COVID, the state was sending actually representatives from the Municipal Assistance Office to conduct Civil Service 101 training with different municipalities and appointing authorities. There is a booklet, but I don't think their travel budget allows for it now. But yes, that is one of the things on our to-do list, is to do the Civil Service 101, not just for legislators, but for the appointing authorities, because we have also oversight over local municipalities and towns and villages. In fact, we did have one 2-3 weeks ago for our municipalities. And I think about 14 of the representatives from our local towns and villages attended in our conference room. It was basically procedural, but that's possible as well for legislators.
Ruby, are you seeing a decrease in people applying and taking the tests? Is that kind of what I'm reading in some of this?
For the most part, but our last few exams, we've had quite a few applicants, and which was surprising. We were on the downward trend, but it seems to be picking back up. And I don't know if that has anything to do with a lot of the assistance now from COVID being ended. But our last few exams, we've had more applicants than we thought we would have.
That's good.
That is good. Okay. Are we ready to move on? Looks like. Thank you, Ruby. Okay, so now we have a resolution reappointing our Tompkins County Commissioner of Social Services for a 5-year term, ID 11055. Would someone like to move that? Rich, thank you. And Greg seconds. Any discussion, or Lisa, do you want to speak to this?
No, it's, I was part of the search committee with Joe Mariana when Kit was first appointed. I can't believe it was 5 years ago. And I'm bringing forth her recommendation for her reappointment for another 5-year term with great enthusiasm.
Okay. Does anybody feel like we need to go into executive session to discuss this? Good. No one thinks that. You're fired, Kit. No, just kidding. I saw a hand.
I just wanted to say, I think we're lucky to have Kit with us, and I certainly support this action.
I agree. Kit, it's a huge and often thankless job, and you do it really, really well. So thank you.
Thank you so much, Deborah and Mike. I really appreciate it. I appreciate the opportunity to have another 5 years. We've had tremendous retirements, as you all know, over at Social Services in the last year or two, and right now we're gaining steam with a new team of leaders. But I welcome the opportunity to continue working for the next 5 years to restabilize things and to help social services grow in the right direction. So thank you very much.
Thank you. Okay, everybody ready to vote? All in favor?
Let's have a roll call.
Oh, okay. Mike wants a roll call.
I'm going to forget how to do it.
Okay. Go ahead.
Deborah Dawson,
Yes.
Lee Shurtleff,
Yes.
Rich John,
Yes.
Mike Lane,
Yes.
Greg Mezey,
Yes.
That's
5 ayes, 0 noes.
okay, Kit. We own you for 5 more years. Congratulations.
Well, it's got to go
Thank
to the
you again.
Okay. All right. Next resolution, authorization to increase hours, senior accountant, clerk, typist, health department, ID 11024. Can I get a motion? Rich moves, Lee seconds. Are there any comments on this? Let's see. I saw Frank Krupa, so maybe we should ask him. Hi, Frank.
Hi, good afternoon, everyone. Pretty straightforward. We're just looking to add some hours to an existing position to create capacity in the department, and we have budgeted this for 2023 as well, and don't need any additional resources to do it.
So I wanted to be sure I understood. The hours are increasing, the salary will increase as well, but you have money already in your budget that will cover that increase.
Correct.
Okay, thank you. Does anybody else have any questions? Ready to vote? All in favor? Oh, yeah. All in favor? All right, that's unanimous. Thank you. Frank, while we've got you here, let's do resolution E, transfer of employee safety and health coordinator position from the health department to county administration, ID 11046. Can I get a motion on that one? Rich moves, Greg seconds. We just need you here, Frank, in case anybody has any questions about whether this position should remain where it is. Okay. Lisa?
So this, the moving of this position was brought forth by Frank. My understanding was that for several years, we were able to draw down state reimbursement for this position by having it sit at the health department. That's no longer the case. It hasn't been the case for many years, and it doesn't appear that it will be the case in the future. At the same time, this position works across all departments, handles, in many cases, some highly confidential information about departments. And so it would make sense to put it in a department, either administration or another confidential department, where those matters can be remain confidential and also have oversight across the organization. So that's the reason why we opted to move it to county administration.
Thank you, Lisa. I saw Rich had his hand up.
Yeah, just for clarity, I intended to move the revised resolution that appears to have partial year salary.
Yes, thank you.
Thank you for that clarification, Rich. Any other questions? Mike?
I think, considering this position, health and safety, do you think administration is better suited to supervise that than the director of health?
Well, I don't think that I don't think that the expertise for the supervision of this role necessarily delves into, I think that the person will come with the background necessary to fulfill the duties, and being that it applies across the organization, I think that it's better suited in county administration. So I don't think that there's a discernible difference in terms of the skills necessary for supervision between health or county administration.
I saw Frank raise his hand to respond, so let's hear from him as well.
Sure, and thanks for the question, Mike. Lisa, I hit it on the head. I mean, the type of health and safety we're talking about is really related to OSHA and PESH, which is not in the expertise of what we do at the health department or mental health department. And quite frankly, we've had to learn it each time that an issue has come up because it is not our area of expertise. So I've been trying to move this every time there's been a vacancy since I got here 10 years ago. We have not received state funding the entire time that I've been here. So I guess now it's going on almost 12 years. So it really is just a remnant position. And the one thing that hasn't been mentioned is it sometimes puts me in an awkward position where I'm providing supervision to a position that is intimately involved in what are very sensitive and confidential personnel matters that oftentimes involve another department head, of which I don't have oversight or authority with. And so from my perspective, we don't provide any level of expert oversight to the position. And it can put us in awkward personnel matters where I do believe county admin and or HR are better suited to address. So that's why I've brought it forward each time.
That helps. Thank you. You got room for him, Lisa?
We have one.
Or her?
Yes, we have one possible space left in county admin to house this position.
It's in a closet, but it's there.
Covered under the stairs.
Okay, Rich?
I was going to say in prior employment, I was given responsibility for supervising our health and safety program, and I am not a health and safety professional, but I'm very comfortable with this move. I think it's important to make sure health and safety is given a broad mandate across the departments, and I would absolutely assume that if there was any health department expertise necessary, this person could get it from the health department, but this seems fine to me.
It sounds more legal than health oriented, actually, if it's administering OSHA and stuff like that.
There's certainly a legal compliance element to it, but there's just broad expertise. It's going to be different for every department in the county. And some of it is totally unrelated to what the health department does. But, you know, there is some touch there, but it's very specific. So.
Well, we all want to give Frank a break. He obviously wants to get rid of this. Okay, Lee.
Workplace violence, security have become major areas where they weren't many years ago. There's been an evolution in that. And I know they are working a lot with RL on some of those issues today. So it's expanded from where it was.
Yeah, that was also part of the thinking, is that being the elevated awareness and emphasis on workplace violence, having this position sit in county admin as we continue to evolve and respond to the evolving needs of our departments. I think this is well suited for that reason as well.
Thank you.
Okay, any more questions? We ready to vote? All in favor? That's unanimous. Thank you. Okay, thank you, Frank. All right, so we have one resolution left, and it is a granddaddy of a long resolution. Tompkins County Salary and Retroactive Budget Adjustments for Civil Service Employees Association, Inc., Local 1000, AFSCME, AFL-CIO, Tompkins County Local 855, Tompkins County White Collar Unit number 8900 CSEA, ID number 11060. Can I get a motion on that one? Mike moves, Rich seconds. Take it away, Lisa.
So this is the second resolution. You passed one last month, and this is to enact the salary adjustments in the current year's budget and the retroactive adjustments for white collar.
And this is the revised version, everybody, just to clarify. Sorry.
Yes.
Is
questions?
Yeah, does anybody have any questions? I take it that this breakdown, these many pages of positions are all the positions that are covered in these bargaining units. Is that correct? Okay. Lee?
It enacts the contract from January 1st forward, right? Retro pay is primarily there. And then you've told us in the past, I believe, that there was a reserved amount going into the budget year that anticipated somewheres in this neighborhood.
That's correct. So we set aside funds each year to settle contracts. If they're not settled, that funding is put in reserve. And this is taking from that reserve.
Does that affect the overall fund balance amount?
Because you were talking about general fund balance. This is set aside for that specific purpose, so it's not part of the general fund.
That one line that said reserved, correct?
It's that, it was that assigned, the $10 million, I think. Yeah, it comes out of that. Okay, thanks. Thanks, Norma.
Yeah, I was watching.
I know. Okay, any other questions?
Yes. I was just curious as to how the numbers are arrived at, because they don't seem to be all uniform percentage. They're going up in different amounts for different positions. And is the catch up?
I believe when I was looking through some of these as well, I had the same notion. There are certain titles for which there are a number of people in the title. So.
Right, multiple people.
Yeah.
So just if I could pick on one, Deputy District Attorney or Assistant District Attorney, LVL4, 50,000, that's being divided among several different people. Okay.
Correct. Yep.
Okay.
Yeah, it's like the psychiatric social worker line 4311. That's 116,879. It's obviously not one person. Because if it is, I'm changing careers.
Well, your dispatchers would be 20 people, for instance. That's what I'm on.
I certainly don't want to suggest a ton of more work, but if there was some designation of how many positions it was being spread across, this resolution would make a lot more sense to an outsider. But that's probably a ton of work.
That's a ton of work.
Unless we get a new budget system.
And so if it is divided by the number,
Shameless plug, Norma.
if it is divided by the number of people in position, then it is being advanced by a uniform percentage.
Yeah.
The contractual amount, which is 4%.
The resolution also includes, it's not just it's a salary increase and retro. So that encompasses both. It's retroactive and salary increases, which also.
But the retroactive should be uniform as well, correct?
Yes, yes, but it's based on budget, but yes. Mhm.
Okay, anything else?
Just another question, just
Do you just want to grumble, Lee? You just go right ahead.
Would I grumble, Deborah?
No, I don't know.
But the CSEA saw no increase on January 1st this year. They did. So it's partially implemented.
Yeah, this is just the back end moving
This
of
is the
the
back end.
funding.
So you went ahead with it. Now we're catching up. Okay. No grumbling here.
Okay.
Taking it out of the reserve and putting it in each of the departmental budgets where it needs to go.
All right. Anything else? All in favor? That's unanimous. Okay, we have reached the end of our written agenda, but Michael.
Deborah, and just for the record, again, we were moving the revised.
Yeah, I
couldn't remember if we said that. Okay.
But Mike Lane has asked to say a few words about a capital projects at TC3. So.
Well, actually, I wanted to bring you up on a few things at TC3 and then talk about some things we learned this morning at the Capital Project Review Committee at the college. Some good news. We learned that the increase in FTEs is now up to 22% above last year. And
full-time enrollment, right?
Right, full-time enrollments. And that there are now 280 students who have signed up for the dorms. And that's above what they budgeted. I think they budgeted about 250. And so that's good. We still got a couple more weeks in August for students to try to register and hopefully get into the program. They've worked very hard on increasing the student enrollment the last few months, because frankly, if they don't have the student enrollment, you're going to not be able to continue the programs up there. There are trustees on the Board of Trustees that are appointed by the governor.
Is this on TC3's board or on the SUNY board?
No, I'm talking about TC3 board.
Really?
Tompkins
Okay.
County. There are trustees appointed by Tompkins County. There are 3, and there are trustees appointed by Cortland County, which is, I believe, 2. There's a student trustee that changes every year, and then there are gubernatorial trustees from each county. Elizabeth Burns has been on the board for a long time. She was a gubernatorial appointment. She was served as president or chair of the board during her time up there. She's been holding over because her term expired 2 years ago. And unfortunately, Governor Cuomo's was not very good at getting a lot of different kinds of appointments made, not only at community colleges, and there were a lot of problems at community colleges, but other kinds of appointments. Well, when a trustee term is up, that term continues until there is a reappointment or someone else appointed to replace. And so the 2 years have gone by, and just a couple of days ago, Liz Burns said she got the letter from the governor saying that her term was up and that that she had appointed a new person to that position. So the other vacancy, gubernatorial vacancy, was the position that Dami Harath had on the Board of Trustees of the college. And Dami had to resign in the middle of her term because of family issues she had to deal with. And that has been vacant since 2018. There's no one to continue to carry over, as was the case with Liz Burns's seat. So we believe that is moving again with an appointment through the governor's office. they are political appointments, frankly. The county chairs in the counties of the particular party, which is the governor is a part of, usually have a strong influence on who the person appointed will be. They make the nominations, is how that works. And then, of course, the governor's appointment secretary in that office, Mr. Ward, they do the vetting, and they have to, pass all the background checks and things like that. So we do think that's working, and hopefully that one's going to get filled. And it makes a difference for that board because they often have difficulty reaching quorum, particularly in the summer. So I want you to bring you up on that. Now, the other thing is about the capital program. First of all, they got that $3 million grant to improve mostly the labs and classrooms, like the chemistry labs and the biology labs and the nursing program. And those things are all underway. We learned that this morning. They do have to do some asbestos removal. The asbestos they're finding is in the glue in the carpets and in the like the spackle in the drywall. So they have to have that remediated before they can like tear down a wall or something. The exterior work that we have agreed to help finance, and Cortland had agreed to help finance, mostly parking lots and sidewalks. That started this morning. What happened there, Cortland didn't have any cash. And so they actually bid, their highway department bid on the work. And they are doing in-kind work. They'll actually get paid. There's $800,000 that mostly from her funds that are being allocated for this work. It won't solve all the problems. I think it's her funds, but it's our money and Cortland's money and state money. And it will, as I said, they're starting to work on it. So when Cortland gets paid, they will be credited for what they owe themselves, but they will also receive some additional funding. And the idea there is that they may be able to use that toward the next projects that we have coming down the line. Deb, you were there when Bill Talbot talked to us last year about the deferred maintenance up there. And it's $41 million. So
A lot of deferred
we're not going to write a check for that. But what we talked about in those committees or ad hoc committees with Bill Talbot was the idea of starting a fund for this deferred maintenance. And it's time to start talking about what we would put in the budget for that. And I said this morning that with our county administrator working on her budget, she needs to know if that's something we're going to want to do. Bill will be providing us with a one-page request that should be coming this week, I believe. So you'll have something to look at and something for us to respond to if that's something we want to do to help with the college, and if Cortland wants to do that as well. So I just wanted to let you know about that's where that deferred maintenance issue is. Those are pretty much the things that I wanted to bring forth.
A question or more of a clarification. My recollection from last year, and I don't have it in front of me, was that it was going to be perhaps a series of multi-year OTRs on
Right.
behalf of TC3 for their capital program. Are you talking about something in addition to that? The deferred maintenance, or?
I don't think so. I think it's what we talked about before.
Okay.
And I think he'll lay that out in this. I just wanted to make sure he did it and understood we've got to have that. So you can look at it and see what you think of it and give us recommendations on it.
Thank you very much. We'll look for it this week.
I think so.
Great, thank you.
Yeah, so just to clarify, even though we are contributing to the beginning of the capital fund, we're still subject to the same restrictions in terms of the split between the two counties. Is that
Correct.
correct? Okay, so something you said confused me because my understanding from last year when we funded the paving projects, which were the top priority, was that we were giving money and Cortland was contributing services. So I'm trying to understand why they would be paid from HERF funds, because those HERF funds are the colleges.
I may have that wrong, which funds that is. But what's happening is the college had to bid the project. Okay? And Cortland bid on it. And they were able to bid less money for the whole project. So the college will pay Cortland, but the college will receive a credit for what Cortland owes for its share of that. And Bill said he'd been to the Cortland finance committees saying, why don't you take this extra money that's coming in and put that into this deferred maintenance account? And he said he got good reaction from the Cortland people about that.
Sounds like money's just going in a circle.
Well, you're gonna,
So that would make it look as if Cortland was contributing more money and that would allow us to contribute more money. Is that how this works?
no, we've already agreed on how much money we're gonna contribute.
No, I mean, in future years. I just don't
Yeah,
understand why.
that's the idea.
Okay,
Yes, exactly. And it's not unusual for a county department to bid on something. We've had facilities bid on work at the custodial work at the airport in the past, or and things like that. They don't always get the bid because an outside contractor may be bid less for the project, but we've had that happen in the past.
okay. It's just a little confusing because
It
I
is
thought
confusing.
that they
And the
were
first time I
donating
heard that-
services.
And Bill is very good at explaining these things. I'm probably not as good secondhand reciting what he said this morning.
Anybody have questions about any of this? Thank you for the update, Mike. And if there is nothing else, I think we're adjourned. Have a good evening, everyone.
Thank you for